Hello friends, thank you for tuning in to our channel. In this video, we will be learning some of the key accounting concepts, which holds the utmost importance in the business. Welcome to our channel, and for all those first-timers, this is little as 5 minutes, your one-stop destination to learn a new lesson in just less than 5 minutes. The very first concept we will learn about is entity. This concept states that all business organizations are treated as distinct and separate from owners or investors. Accounting records of the business organizations are maintained for the organization and not for the owners of the organization. In other words, the financial information disclosed by organizations should only pertain to the transactions or events that directly affect the workings of the organization and should not include activities that affect the owners or investors. The second concept holds the most importance, and that is money management. The money measurement concept states that in financial accounting, only those events or transactions that can be measured in monetary terms should be recorded. In other words, if the impact of an event or a transaction cannot be quantified in terms of money, it should not be recorded in the books of accounts. There are 4 generally accepted measurement bases: historical cost, current cost, realizable value, and net present value. Historical cost is the amount paid or payable to acquire a benefit. The current cost is the amount to be paid if the asset is to be acquired currently. Realizable value is the net amount collectible in the event of asset disposal. And net present value is the total of the discounted value of future cash flows that an asset is expected to generate in the ordinary course of business. The third concept to remember is cost. By this concept, the value of an asset is to be determined on the basis of acquisition cost. Although there are various measurement bases, accountants traditionally prefer this concept in the interests of objectivity. Other measurement bases are not so objective. The current cost of an asset is not easily determinable. If the asset is purchased on the 1st of January 2021 and such a model is not available in the market, it becomes difficult to determine which model is the appropriate equivalent to the existing one. Similarly, unless the machinery is actually sold, the realizable value will give only a hypothetical figure. Lastly, the present value base is highly subjective because to know the value of the asset, one has to chase the uncertain future. The fourth key concept on the list is understanding, dual aspect of accounting. This concept is the basis of the fundamental accounting equation: assets equals liabilities plus equity. Assets are what organizations own. Liabilities are what the organizations owe to others against the assets. And equity is the difference between assets and liabilities and represents the amount due by a business entity to its owners, investors. We will look into a few more concepts in our next video, where we will try to understand the concepts of objectivity, time period, conservatism, realization, matching, and materiality. Let us know how you find this lesson. Was there anything you already knew? Did you find this useful? Do you have any related information you would like to share? Leave it in the comments below, we love hearing from you. And if you liked our video, don't forget to give it a thumbs up and share it with your friends. I bet this would be helpful to them as well. Hit subscribe and ring the bell right now to stay updated on more such little interesting lessons that will matter the most. Stay tuned.